Welcome to Trading Sadhguru. Uh, Let us first look at what we had discussed in the last video for the week gone by. Okay, so here it is, our last video. So this pattern, the September to till now, this pattern was broken, and in our video we mentioned that this is the 0.618 and zero point 0.5 zone as per Fibonacci. So these two values 22,915, 23,140. This is 0.618. Okay, and this is 0.5. Okay, levels on a Fibonacci levels. Okay, so we expected market to test this zone under normal condition. Okay, so because see, if at all market has to reverse, it has to take support around these levels 22,915 to 23,140 and then move upwards. Okay, else if the market is going to go down, then it may test the trend line. Okay, from here also it can reverse. Okay, or else it may even break this trend line and test the previous low. This was our expectation, and as expected, the tariffs, the Liberation Day tariffs imposed by the U.S. president uh, are going to come into effect. Okay, in the coming week. Okay, so China has already announced retaliatory tariffs, and we may expect some sort of retaliation from the other countries or even revision in the tariffs from US side. Okay, so it is going to be a very uncertain week, coming week. So uh, okay, let us remember these trend lines. This is the long-term trend line which was broken here, and because of the Liberation Day, this thing and market has gone down and tested these levels. Okay, on Friday. Okay, so our view, our level has worked out very well for the week gone by. Okay, so let us now come to empty chart and see what is in store for the coming week. So here it is, the same chart, blank chart. This was the long-term trend line. Okay, broken on upside here. Okay, made it off, and from there it has corrected. This is zero point 0.5 level. If you look at the Fibonacci ratio between this range, okay, so this is the zone 0.6182 to zero point 0.5 zone, and we are exactly just below the zero point 0.5 zone. Okay, so let us put it on a proper chart where these lines are drawn properly. Let me erase these things. So this is just to visually see it clearly. Okay, for that purpose only I've made this chart. So this is the zone we were talking about, 0.618, 23,141, zero point 0.5 is 22,917. So we are just at 20, closed at 904, just below 0 0.5 level. And the tariffs are going to come in the coming week, and it is US market. US market is down by almost 8 to 10% in the last two trading sessions. Okay, after the announcement. Okay, so we may expect the downward move to continue and the uncertainty to remain in world markets in the coming week. Okay, so we expect this level to be breached. See, our bias is on the basis of our bias is uncertainty generated by the US tariffs, okay, which are going to come into effect in the coming week. So with that view, and this is also candle has closed below zero point 0.5 level, 50% level. So our bias for the coming week is going to be negative. Okay, so under this assumption, we will try to analyze and predict or estimate the levels for coming week. Okay, so we expect market to test this trend line. Okay, somewhere in this zone. How? On the way, it has to breach this level first. What is this level? 22,692. So this level is 22,692 first, and then somewhere here in this zone, this is the trend line around 22,600. Let us check one more time. What is this value? 580. So you can say 550 to 600. 22, 550 to 22, 600 is going to act as a some sort of a support. Okay. So in this zone, you may find support because this is a long-term trend which has been broken here and we are correcting from the top. So if at all there is going to be any support, we expect one at this level, other at this level. Once this level is breached and Nifty starts to close below this line, so the testing of previous low, that is 21,964 is imminent. Okay. So here also, once this level is tested, we cannot say whether it will bounce or it will go. So as a trader, we have to keep our mind open for both the possibilities. Okay. So if it forms a double bottom, then you may expect a correction. If it breaches, then we may go further down. Okay. So most likely because of the tariffs, there is a huge tax applicable even on US companies operating outside the US, like Apple operating in India and China. Those goods which are going to enter into US, they will also be tariffed. So you may see there is a lot of what do you call stock clearance before the tariffs come into effect. Okay, so even companies might have to take a share of these tariffs in on their balance sheet for some time before it is passed on to the end users, that is the public in general. Okay, so we expect this down move to continue, and these are the levels. The first level is 692, and then 550 to 600, breach of which the doors will get opened for the previous low, that is 21,964. So we will limit our downward view till this level only. Okay, based on the actual developments in the coming week, we will see whether the market is expected to go down or go up. Okay, so our bias is going to be negative for the coming week. So we are not going to fight with the market and take trades on the upside. And so far we have been we after breach of this level we considered market to be buy and dips earlier. Okay, but because of the tariffs and this point six and this zone is broken, now we don't want to latch on to that assumption that it is a buy and dips market. Okay, okay. So for now we don't go into that zone, so we don't consider it. So we expect correction to continue. Okay. So those who are into options trading, derivatives trading, so they may opt for limited risk strategies with a bias on downside, protecting on the upside. So when you are on the downside, corrections are going to be corrections on upside are going to be brutal. When you are going downside, corrections towards upside are going to be brutal. When you are going upside, corrections on the downside will also be brutal. Okay, so we expect market to continue downwards, but for a safe side, protect your upside with a far out of the money options in case you are into options trading or derivatives trading. Okay, so risk management, money management, uh, loss limitation is most crucial when you consider trading as your profession, and that is the reason around 90 to 95 people are making losses, that as per SEBI study. I don't have the exact number, but roughly I remember it's above 90%. So protecting capital is the most important thing, okay, for most of the people. So trade carefully, don't risk all your capital, always try to hedge. Okay, even if your view goes wrong, you don't end up losing big. Okay? That's all for now. Take care. Bye bye.